Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. The markets are trying to firm up. You can see it there with the Swiss. Well, no, that on the stock market, that is. The Swiss itself is seems to be setting even a higher range again, or at least trying to. Looks like they're adhering to the channel. Let's see, do we have the right place? Yeah, there we go. There it is, the channel. You can see it's playing with the channel in there. You can see, J4X moved up. We've got the green hinky ashies on the J4X, and we've got the green dots on the doc. In the Chicago quant there. So, you see that the dollar is firm. There was, just a teeny weeny little concern about possible weakness of the dollar, blah, blah, blah. They talk like it's 2007. They talk like it's 1995. They talk like it's 82 or 75. They don't talk like it is what the reality is right now. That's that we have to seem to always put up with that situation, is that they don't talk reality. In other words, they don't talk about real time anymore. What's really happening now, they just kind of spin the story. Let's spin the story. But anyway, end result is that the dollar is not falling apart from all that action. With the selling off yesterday of a nice little sell-off. Nothing major, just a consistent slide. It was fine, no complaints there. But we're not really getting any real damage done as far as I'm concerned. We could go on for a couple of weeks. That would be probably better than anything else. But in the end result is that it seems like they're setting up to build that low in October so they can take it through the roof. There's so much cash out there. There's so much lack of product. Where to go, what to buy. In other words, there's very few things you can really buy at this point. The central banks have been buying anything and everything that has any value to it to basically stamp out diversity when it comes to investing. So, and keep all the equity, like it's like a big timeout. You see, that's what we're really going through. The timeout of 2008, we're still in it, and no one wants to talk about it. And hence why you see like gold and silver really not participate in a chaotic era, because they press it down, because they turn it into a paper asset, and hence the reason why we have cryptos today is because of the level of irresponsibility of the central banks. Just was it? I said yesterday 30%. We find out it's 32% of increase in money supply and cash just over the last year. Just over the last year alone, 32%. As we take a sip of our tea here, that they're incredibly demonstrative numbers. They're enormous. I mean, they're not something to sneeze at. That's pretty powerful. That's why we see inflation on some level, not counting supply chain problems. That is the other side of it. They want. They need the government to be shut down. They need not the government. They need society shut down, and that seems to be what the recipe is. And it's not going to go away until these people are removed from office. Let's see what else we got going on here. So you can see the Swiss clearly is representing the fact that the dollar is staying firm, and you would think that dollar should be a little bit weaker. It's part of the mechanics of the chaos itself. Nope, because there's nobody else to replace it. I keep on hearing stories about zero GDP in China. No one, other like Morgan Stanley or Goldman Sachs or someone came out and said, I don't think it was Goldman, because I think Goldman's been talking about zero also. Came out and said, China's got us like a 7% GDP right now. It's like right now it's looking like zero. They're not growing. Looks like they're trying to find a way to bail out Evergrande, whatever they want to call it, Evergrande. They sold a small percentage of their position, their stock in the company, so it's not totally controlled by whatever corporation it is. They sold about $1.5 billion to get some cash so they could pay some of the bills. We're seeing the weakening of the Chinese communists. Really, it seems like that's what we're really watching. Is the Chinese communists are kind of losing a grip on the whole situation. Hey, Douglas, how you doing? Good morning to you. So that's where we are, and that's where the dollar is. It's firm, as you see on Chicago Quant, and as you see on J4X right there. And a shout out to Janos too. It sounds like the surgery went well. You know, God bless. We saw that on the chat lines. So this is good. You know, it was an eye surgery, and Godspeed. Hope everything everything works out fine. All right. From there, we'll shoot over to the euro because they all went into sells yesterday, like the euro and the GBP and so forth. Let's take a look at that. Put it up. So let's put it up on J4X first. And in the beginning of the week, it was interesting to see them drop right through the weekly number, right off the beginning of the whole week. It's just boom. Here we are on Happy to Hump Day, and they're still pushing it down. There's the euro right there. I mean, right from the first day, whatever little strength that tried to come in, boy, did it fail. And it looks like they are making their best way to get down to that bottom end of the range. Let's see if we widen this out a little bit. You see that? The candle is making like a new low, I think. Let's see, the last low we saw was 1.1664, we'll say. And today we are at 1.1640. So we are making a new low. Compared to back there in what was that? Back in 8, so that would be August. In August of 21. I'm sorry, August of 21. So the pressure is on. They're coming down and challenging that bottom end of the range, just like we see. Again, we'll go back to the Swiss, just like we see in the Swiss, where it is just adhering right now to the top of that range. Now, again, Doc has rambled over the years about some type of magical channel / envelope / what defines if you're manipulating your currency, and so that's ever small. Yeah, you know what's really funny is they basically say, how do they say it? They say Evergrande is, in Western terms, that's what they say. In Western terms, has 302 or 305 billion in debt. I wonder what that means in Western terms. They say that. I mean, they're probably trying to count it like a Western asset, but it's not a big nut, you know, when you really think about it. You know, it just shows you how small China really is financially. For them to be deeply concerned about a company that has 300 billion in debt and not able to figure out a way to, pay some of that debt off seems a little odd, especially when they control all the stock. So it's like, ooh, if you control all the stock, well, why don't you sell a little stock off and pay your debt? It's capitalism 101. I guess that's what happens when communists try to play capitalism and just want to take the money but not do the work. I think that's what it comes down to. And communism seems to be a socialism. Communism seems to be thinks that work's bad, where instead work is good. I expect to work the rest of my life. I've never thought about stopping. I grew up in an environment where all the old men, all the old gentlemen used to say, never retire, keep on working. It's a good thing for you. Keeps you active, keeps you mentally strong. And they would be like, be retired, and they didn't know what to do with themselves. So find something you like and work at it. And that's what that is all about there. And so these communists keep on thinking that work is bad, or it's odd because they have slave labor at the same time. So obviously, that's not a lot of fun there. How about just normal labor, where you're allowed to take off Friday and Saturday and enjoy the weekends? Work an 8-hour day, not these 12 and 14-hour days you hear about, and 16-hour days you hear about in the shoe factories like Nike and so forth. All right, let's jump over to the cable. See what they're doing with the cable. I mean, we know what the cable's doing. It's doing the same exact thing. It's taking the same trend. Look at the dip here. It's down into the low 134.70s area, And you can see the white line has pierced today, and two red hinkies. And looking at it through the Chicago Quant, you see right there, same situation. We've been in sell for 2 days, a couple of reds, and they also did the same exact thing. Beginning of the week, they just buried this thing. You know, the histogram was buried right from the beginning. So they are anticipating, let me just give that a there you go. They are anticipating that the dollar was going to get strong. I guess they look at it as a safe haven. You know, they always buy dollars, even if it's if America is making the problem. They buy dollars because it's kind of like a separate entity in a sense. It's a safe haven, it seems like. And you can see here, there in August they've taken out the August lows with no problem, which is a surprise to me. We can get rid of that Fibonacci sequence there, and we'll go hunt another one if we start talking Fibonacci again. Which I was watching Passion yesterday. Remember one of the other fellows on the Dukascopy webinar system here does research on and teaches how to utilize and explore Fibonacci. Something well worth tuning into. So, you know, think about tuning into Passion's Fibonacci class. All right, and that's gone there. You can see, you know, our system is basically, you know, screaming that there's weakness, 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 and that's what there is, weakness. And we'll be back into that weekly sell with this type of action. I don't really expect to see too much. Window dressing normally is yesterday, today, and tomorrow. Maybe tomorrow towards the close. I think some traders are talking like today. They want to see, no matter what the market does today, they want to see some buying at the end of the day. That'll make them feel more comfortable. So you can see they've been slowly selling this market down when it comes to the stock market over the last few hours. Let's go to that at the moment. That could be closed. Right, so we go like that, close. Space, there we are. And there's a stock market. And there is the S&P 500 right there. You can see it's been in a downwardly trend, let's see, since basically the Frankfurt London Open. There it is up there. There's the Frankfurt London Open, and there it seems like Asian market took it up, sideways I guess you could say right there. And then it there's the Frankfurt London Paris / you know, Swiss openings, Milan openings, you know, everything, you know, Spain, whatever, you know, all the European markets opened, and you can see it's been slowly working the assets, the stocks back down again. So, and you can see right here, it ran up to as high as 4,375 on the S&P 500, and now we are down to 4,360. So we're about 15 handles off the highs. And when it comes to the, well, that's just a little flavoring. We'll go back to the stock indices towards the end of the webinar unless someone wants to see something. And let's just put that back together again like so. There it is. And we'll drift back now to the Turkish Lira. Oh yeah, there you are. There's the Turkish Lira. Still flirting with that yellow dashed line we've been watching for like 5 months now. President Erdogan raised the rates, I guess. Their central bank raised the rates, something like that. And put a little charge into the currency, making it weaker than normal. Let's see, right there, there it is, dollar Turkish lira. You see just down a little bit today. We got some still good green going on. And as you can see, even with not seeing the full screen on the Chicago Quant, you can see that it's widened out a little bit to emphasize it more. You see it right there. It's just banging up against that top trend area we've been watching for and expecting it to get to. And too many twos in that conversation there. You can see in Chicago, in the J4X, you can see the strength is there, and you can see all the green hinky ashies matching up to our green dots. What's curious is the last couple of days, 4 days now, maybe there's a red in there somewhere. Let's do this. Because Let me just rescale the red. There it is right there. Set to the screen. Okay. Now let's see what happens if there's a red up there. Yep, there's one red. But what's curious is that we've had 3 days of no dots up there at all. 3 days. Well, there was one here at the beginning of this move too. 3 days of no. Maybe 4 days. Look at 4 days of no. So, I guess with this going on, maybe. Oh, look at that too. It's working its way down today. We're seeing some downward pressure. We'll see how they treat that the rest of the day. See what's happening going into tomorrow. Now let's take a look at the Euro Turkish Lira. There it is there. You see doing the same thing, showing that pressure. And let's take a look at it on J4X. There it is. Oh. That's Japanese. Oh, speaking of which, they got their new prime minister, so that's interesting. There we go. And you can see it's trying like the dollar pair, also breaking down. You see that right there, breaking down. There's the sell there, but the weekly's holding up pretty well. I don't know if we're gonna. I don't have a strong opinion. We've gotten up to the range we wanted to get up to. Now we'll see what the rest of the world does when it comes to interest rates and so forth. I mean, there's talk of the 30-year bond here in the States, which is trading in the 150s maybe, or 150 or 149, getting up to 177. That's not too bad for a 30-year bond still. I mean, it's awful cheap. And we can, real quick, just jump over to that neighborhood and take a look at that too. See if there, I know it's pushing through a buy this morning after being in the sell for a few days. There it is. We'll give you just a quick view of that right there. And that's the 30-year. You see they're putting some pressure onto it. But it's going to hold down into the weekly, so I'm not that concerned. But they are talking... by the end of the year, they're thinking it could get up to like in the 170s, and it's yielding now in the low 150s. All right, that's a 0.25% move. That's nothing major. All right, so that clears off the Turkish lira, and I just thought I'd just mention that bond situation there for traders. And now let's jump over to the Canadian. Let's see what the Canadian's up to. Right there, as you can see, Canadian went into a buy yesterday, and it's lifting up a little bit more, and you can see that same odd situation where everything last week went one way, and this week they are reversing it. So whereas the stock indices went into weekly buys, all of a sudden they're now well below their weekly sells, and a lot of currencies went into weekly buys, and now they are reversing. And same thing with those that went into weekly sells, are now reversing and climbing back into the buys. So last week was very dramatic. I guess maybe due more to the thinness in the markets over the summer, and now we're starting to move into the regular trading season. So that might be part of it. So there's the Canadian, and since that's moving up, we're assuming gold is moving down. We're assuming oil is flat to down, and we'll go from there and check that out now. Oh, no, I just want to see it on J4X too. I like to constantly compare to make sure that we don't see anything too dramatically different, just lagging. That's about it, and that is the way it works with the J4X. I mean, it's the best indicator we can put together on a public platform. Yep, see, it's trying to turn up, and we got a green hinky there, and so it gives you a flavor of our work. It might be 4 or 5 hours behind, but it's not bad compared to like putting MACD on there, which could be like a day behind. All right, from there we jump over to let's take a look at it. Let's take a look at gold, and there it is. It's firm a little bit more. It was acting much stronger, but still in a sell. So it's been in a bunch of sells now since here. 2, 4, 6, 8, 10, 11 days now in that sell. Interesting. And no problem with pushing itself back into the weekly. We'll go through the metal sector after we complete all the currencies. Unless someone wants to see something. If you want to see something, just shout it out. We'll check it out. And then let's take a look at crude right above it. You can see crude just down a little bit, but up from the lows of today, flirting with the sell. And you know, that's the action we're seeing there. And you can see the weekly's holding up pretty well there. So we don't expect more than anything like this. You know, a shallow correction. I don't expect to see a major correction. All right, from there we jump back to the currencies due to the fact that gold is kind of sideways and down, and oil is somewhat that way. We assume at the ruble, when we go and look at the ruble, let's put that up there. Not the ruble, I'm sorry, the South African rand. Right there, we start to assume that the South African rand should be moving up again. You know, it's been moving up for days. There it is right there. And it looks like unchanged down a little bit, nothing major. And you'll be able to see lots of green there. And then let's take a look at it through the Chicago Quant. See what our math is saying about it. ZAR. Zool, like in Ghostbusters. Zool. There it is. Activate. And you can see there, just up, you know, just flat, but still green. White line is trying to turn down. You can see that, nothing major. It's not even touching the time manifold there, that plus time manifold right there. You can see the weekly is turning up. After being in a sell from here, it is fighting, and it's been in a daily buy from here. It's just been banging away all the way up. So, you know, we can see that the metals complex, this probably tells us that the metals complex, in a world that's totally concerned about rational financial thinking, the gold market is dead. You know, it may not be getting crushed on the downside, but it's not climbing, which is what has been historically the go-to. What's really sad I'm sad that gold doesn't function anymore the way it used to, but more than that is I'm sad that the cryptos are not representing it either. You know, we were hoping that the cryptos would represent a place to run to during chaotic times and inflationary times, but instead Bitcoin is not exactly seeing that type of action either. Let's go down and check out the October contract here. And you can see you can't see that. Let's move that down. There. As you can see, it's been weak for a few days here, and it's not, you know, it's trapped in that nice range, you know, the 50,000 to 40,000 area. That's not too bad, drifting a little bit in either side of it at any given time, but nothing major, you know. So we're hoping that that will be the savior to a pairs side someday, where you can be, when things are really bad, you can buy cryptos. All right, from there we zip back over to the currencies and we take a look at the ruble right there. There it is there, the ruble. There we are. The ruble, you know, sideways, going nowhere, no real conviction. China did step up a little bit and complained about how Russian Federation has been abused by the Western nations with their rules and regulations and so forth. Communists are not really big on rules and regulations. So, you know, it was nice that they said that stuff. You know, I myself am always thinking that the Russian Federation is going to have a very solid currency one day. I really do think it. So, it kind of reminds me of like Mexican Telecom when it was trading at $1 back in the 80s. You know, and then it ran to a couple $100. You know, I kind of think the same thing about the ruble. One day we'll be trading at 39 or 41 or 29 or something like that, and people will be like, "Wow, I should have been invested in the ruble." All right. Let's see. There's ruble. We go to, and now we know why that action was last week in the yen, and that was because the prime minister was going to resign, and they were going to have a change of leadership, not necessarily political, but change of leadership. The fellow who supposedly was a upset candidate who won is totally connected to the whole LDP, so it's kind of odd that they refer to it as a upset or an outsider winning. Don't really see that, but that's a modern media. You just never know. You can see here the yen has been moving up, and it's weakening the value of it. More yen to a dollar. Nothing major. 111 versus 109. I am sure that nobody really cares about that much. They seem to find a way to downstream the cost. You can see here the weekly has been firm since here. Oh, you can't see that. So you can see there, the weekly's been firm since there, and we've, so I guess that's when the news really was. That's when everybody knew that it was falling apart. I have to say. Yeah, when you go into a weekly trend, and then something politically happens 7 days later, you know that they knew that it was happening, and it was just a matter of time for it to play itself out. All right, and then last but not least, we'll take a look at the Mexican peso. There it is. I hear the John Wayne movie in my head all the time when I say Mexican peso. Now this is flirting with a weekly buy here. You can see the daily has been a daily buy for 2 days from here. We got that warning yesterday, as I was mentioning. That weekly, 2 days ago, Monday, we got the volatility warning, and this was lifting up and pressing up. We thought probably some strength. Yep, some strength, and it's going towards the top of that range there. Let's see. We put two black ovals around those little pops, and we'll see if that can climb up to the 2050 area and kind of stall out again, or it makes a lower high. It looks like we're basically getting ready to make a higher high. Right there, the high is 2045.89. So 45.89 versus 42. So it's still just underneath that high right there, which is lower than this high right there in the 70s. So that's what we're thinking will go along with the yen. All right. And that is our little visit through all the currency pairs. We are a currency webinar with commodity overtones. Anything that is usable to be a dollar surrogate in this modern era of the 2008 world collapse of the financial system, and now we've been in quantitative easing for 13 years, going to be going on 14 very soon. So that's how you look at currencies nowadays compared to pre-2008. All right. From there, we go and look for some of those dollar surrogates. That's really the whole name of the game, looking for the dollar surrogates. And from there, let's do this. Let's see, there's the yen. Well, let me just see how the peso is doing on the before we get rid of the peso on the J4X right there. Oh yeah, that thing's burying itself on the upside too. Pushing hard. All right, let's jump over we'll go back to the metals complex now. And we'll start off with silver and then look at gold. You can see silver's down. A lot of red there. It's kind of hesitated in here, and finally silver's rolled over again. Very disappointing. I always feel sorry for silver players. They keep on hoping that they're going to get some relief when it comes to the product finding a way to climb into something on the upside, but it doesn't seem to happen. This morning we sent our charts out giving the warning that we are below the sell number at the moment. When we close there this afternoon, then we'll put the red down in here. Same time, you can see we've been in a weekly sell for a long while now, 20 weeks. Line 9 or 8, 9. 9 on the fact check spreadsheet. We're looking at 20. See it right there? Let's just emphasize it. So it was 5 days in a buy, 5 days in a buy, and 20 weeks in a sell. See, sell column right there. See, sell. WS, weekly sell. So we've been watching this thing just sit there, and every time it tries to find some strength, it flirts with the weekly buy, plays with it in here a little bit. We're even running a gas 5 plus a gas line 5. We're looking at both of them at this point, trying to find any hint possible. And let me show you what that really means. I'm going to move this up a little bit. I'm going to move the daily up a little bit too, like that. And then we'll move the gas line, which we normally follow. And this is 2 standard deviations and 1 standard deviation of our mathematics. And you can see the green lines are identical, because they're gases. And then what happens, the time manifold is pretty much identical to this one because it's a gas. They're both 5s. But the difference is that the blue line is a second standard deviation from the first one. So in other words, these two, the gold and there, so it just gives you like that flavor of what's possibly going on when it comes to that. And usually when you have the green line adhering to the bottom time manifold here, that's usually like a sign of constant weakness. And then when it lifts up, it shows you that strength that starts to occur. In fact, we could shrink that down like that on these two, just to emphasize that fact like that. So you see here the green line makes it through. It's not through the 0 line, but it shows us strength that's going on because it's a 2 standard deviation. And this is a classic too. When it gets underneath the second line, second standard deviation, and comes back up through it, it doesn't have to get to the 0 line. It's just telling you that there's some strength coming, and it sure was. And then, it does that little dive down right before the collapse right there. And that's the nature of this one. And then if it would have gotten down to there, that'd be really bullish. Not necessarily weekly buy bullish, but shows you more short term. So it's kind of like an indicator that looks at the weekly in a little bit different light, using the same tools, but with the 2 manifolds versus the 1 manifold. And it's an interesting system. So, all right, I just thought, and that's why that chart is sitting on there all the time. We have some traders that like to trade silver. We have a lot of traders that like to trade silver, and so that is a tool for them to get a flavor of what the weekly is doing, but not necessarily watching it go into the weekly on the gas line itself. So, and that's what we usually watch for. Oh, hey, Robin, ask your question. You will get the best answers from Doc. Oh, that's nice. Thank you. All right, now what's next here? From there, we'll go take a look at gold. You see, we looked at it a little while ago and saw that weakness in it. It's trying to get back to the minus side today already. Over on the fact check, it's a 10 days. But went into the weekly buy last week, and the first day of the week, it was like smack down. And then you can see at the same time, we had a volatility signal. Next day, it went into the sell, and nothing really happening, excuse me, at the moment. But it's starting to, it's hard to believe that this thing is going to be dropping into the 16s again, but there you are. You're at 1737 with a low of 1733. It's kind of surrealistic. It's almost like waking up in Oz. It's very strange to watch that all play out like that all constantly. To see the world in such a financial straitjacket, I guess you would call it, or calamity, and actually sit there and watch the metals market go sideways to down, really makes you question financial reality. It really does. All right, from there we'll jump over to the crude oil. Oh, you know what? We didn't do this. We looked at it over here on J4X. That's the silver breaking down, just like we're doing on the Chicago Quant. Let's look at the gold here again. And there's gold. And that's showing a little lift that's going on. And let's just see how well it's matching up. Yeah, see, it's matching up really well with us. All those red dots, let's widen that out just to re-emphasize that. So you know how to read the hinky ASCII and the white and dashed line on J4X. You can see that pressure is there. You see the product's going down. You see it broke the line there. Pressure is going down, doing what it's supposed to be doing. And you can see, Chicago Quant leading the way, telling us the way, keeping you on the right side of the overall trend. All right, can you imagine? We went into the weekly buy last week, and right off, it pushes itself into a sell situation. So at least, it stayed in a sell situation. It was in a daily sell from here, and could not get into the daily buy. I mean, you wanted to, you see gold. Oh my God, gold's in a weekly buy. I got to get long, No, you can't, because why? Unless you're trading binaries or options, no, you don't get long. You're buying just hard assets. And sure enough, we are lower, right there. All right, now let's jump over to oil. See what the oil is doing. Right, where's that? Right there, right above soybeans. There we go. And you can see there, it's trying to break down also the crude oil, and we are doing the same thing over on Chicago Quant. Let's show you there. There you are. Nothing major. And I really doubt that this thing's going to go slamming down in any particular way. We're coming into the winter months. There's a lot of issues with refining oil and the windmills in Europe and everything else. We're not seeing the best alternative energy sources being used correctly or even efficiently. So, for a world that has a bunch of people that are concerned about the weather and think that we have some effect on that weather, laugh, laugh, laugh. We have no effect on our Earth's weather whatsoever. But they got that in their heads, and it's not easy to take it out of their heads. No. Too bad science doesn't match what they wish. There you are. That's crude, kind of just showing its weakness. Oh, there we go. Let's show it better. There. Still in a weekly buy, since down in here in the 60s. So we'll see what they do. I mean, I'd like to see the green line pierce the top of this time manifold right there. That would be at least a warning that we're having some issues on the downside. Right now, it's just some simple weakness with red dots and red hink. We haven't gotten to the red hinky yet, but we will in a few hours on the J4X. And I let me just re-emphasize, this combination is way better than the MACD. And MACD is considered a leading indicator by the Market Technicians Association. This combination is a super leading indicator, or a connected group of indicators. Slow MAC, fast MAC, fast stochastics, slow stochastics, and the hinkies. Max, how you doing, 19? Let's see. Hey, Doc. Remember I said gold aiming at 15 an ounce a target? Yeah, I guess. I mean, it's to me, I try not to get that way, but yeah, I do. I think I do remember that. To be honest, I when people go, oh, we're going to be here in 6 months, I go, okay, yeah, all right. So what's you think that we're still heading to 1505? I imagine. I guess we have to break the, what's that, 1670 something? What's the? Let's take a look at that. Yeah, I imagine once we get past that, hey, let's put it this way: we get into a weekly sell and a daily sell. I'm right there on the same side of the ball as you are. I am a bear. And right now we are heading into that situation, so I'm definitely being synchronized towards being a bear, especially with 10 days of daily sell right there. And we're going to be going into a weekly sell the way this thing's going. It's only Wednesday, but we'll see. Now, I think, what is that low? Wasn't the low like 16 something? Where's it at? There's 1750. It seems like it's taking out some of those lows there. There it is. There's a 16 something right there. What is that? That's 1686. So I guess we take out the 1686. Your 1505 looks a lot better, doesn't it? I said, what made you go for that target? That makes me curious. Is that a Fibonacci, or is that a down slope? Some type of trend line? Gann spiral? What's pushing you towards that 1505? Remember, it went down to 1,000 in this last 12 years of QE. So it's not it's not one of the wilder suggestions. You know what I mean? Now, if you were saying 950, that would be something. But we've been down to 1,000 no more than 6-7 years ago, in the middle of this crazy. Agreements followed by handshakes. What? Them selling gold? What do you mean agreements followed by handshakes? You mean the central bankers? You think they pushed it into that? I constantly agree with you. There's no doubt that the central banks are pressing this metal down. You think that the central banks have done agreements that they're going to push gold down into the 1500 area? Is that the top of the range of something? What's pointing to 1505? Or is it just you think that there's an agreement of the central banks to press this thing down into the do a 25% or 30? What's that, like that's what, a 23% of a Fibonacci from the all-time highs? Could it be that? Is that what you're possibly looking at? That 23%, 22.9 or whatever it is, the weakest of it. When you say agreements follow by handshakes, are you insinuating the what we both here agree is the obvious, and that is the central banks want this product down lower and lower and lower to condone their spending and the lack of potential great inflation? I'm just curious. We'll give you some time to respond to that. And let's see, what else can we do while we're waiting for that? Let's go look at, we'll look at something else, waiting for 19 to give us just a little flavor of the agreements followed by shakes. The question is, who's that? I'm assuming you're talking about the central banks. Let's see, where were we at? Oh, I know what I wanted to look at. From there, I wanted to look at platinum, because platinum last week took off, and now it's falling back down again. We had been in a weekly sell for 20 some odd weeks, and it showed some action there last week. You can see there we went to a buy after 20 or 21 days in a sell, weekly. So we were in a weekly sell for like 21 weeks. Went into that weekly buy last week for one insane moment of a squeeze or something. Platinum went up $100, and sure enough, we're in a sell there from yesterday, and we are flirting with the weekly sell with no problem again. I would say that 1505 reminds me of a retracement from the all-time high of that Fibonacci sequence, the weakest of them all, the smallest starting point. And then when you combine together the agreement of followed by the handshakes and so forth, you have to assume, that the central banks are taking it there. All right, so there's the metals complex. Now we'll drift over to one of the wild ones in the energies. We looked at crude oil, and it's doing the little flirt on the downside. But let's check this out. Look at natural gas again. Oh, look at it. They're knocking it down today. There you go. And we're even flirting with a sell as we speak. How about that? So natural gas is starting to feel some pressure there. I mean, it's up so big, and we've been our math has been so right. It's been a fascinating trade. We've had some customers switch over to natural gas, rightfully so. Smart move. There's natural gas on J4X. See the same thing there. You see that pressure going on. as there are an agreement which is called a signal. Okay, so there are agreements which is called a signal. Okay. Well, there's no doubt that the incorporation manifestos to a lot of funds, if not all funds, it's almost below. I was almost tempted to go open up my. I almost opened up my old hedge fund's manifesto, financial manifesto, the incorporation manifesto. I almost went and looked that up, but I thought I was a long short fund, so I had no sitting positions to worry about. Because we were just playing both sides, trading volatility. I was over. Let's see. Once the signal created, then looking for a handshake, like in a computerization type thing, where it links. Later on, trade the way it is. I see. In other words, they're gonna drive it down into the 15s, and then what are they gonna do? Let it trade freely? Is that what you're suggesting? Later on, I trade the way it is. Oh, you trade the way it is. Okay. Let's see. Once the signal created, then looking for a handshakes. Well, I have, due to the fact that the incorporations of a lot of these funds and retirement funds and mutual funds and hedge funds, all of them have written into their legal manifesto, says that they use gold as an indicator to inflation. So I'm always assuming that they knock that down because they don't want anybody to believe that inflation is too aggressive. And at the same time, there's no, don't worry about the calamity in the marketplace. I mean, that's how I look at it. And at the same time, so in other words, it is, what's the best way to describe this? Gold and silver and the metals in general are held down to convince all the institutions that they don't need to sell stocks and worry. I think that's what it really comes down to. And so when you say handshake, it sounds like a link or an agreement, and but that's how I always view it. That they're going to keep it down for that reason itself, nothing more than that. They're going to keep pressure on it as long as there's QE. That's the way I see it. So 1505 would be a great buy. It would be that one Fibonacci, the 0.23, and that could be, that could be a nice bottom there. Let's see. After 1505, around target down done, then we will wait the market to create an agreement. Oh, okay, I see what you're saying. All right, well, yeah, it just seems to be marching around in that area, and I would be surprised if we broke the lows of 1680s, 1670s. I'd be real surprised if they went any lower than that, just because inflation is kicking up. So in other words, I think to have legitimacy, I think the central banks would hold it in that area for a long while before they went after the 1505. Yeah, I would imagine so. They're taking the stock market down more. Stock market is feeling pressure again. Where'd we leave off? We left off at natural gas. Natural gas is being sold off a little bit too, which is fascinating right there. Let's take a quick look at the stock market. We can take a look at the dailies after that too, but let's go to the S&P 500 again. We've made another low since the London Open, I guess you could say it, or the Frankfurt Open, or whatever Open, European Open. How about that? The European Open. So you can see there we are driving down more, making new lows. That's the S&P 500. The thing is only up almost 10 points at this point. At one point, it was trading at 78, so it was 25 points higher. It was up 35 points. Now it's only 9.5 points up. The Nasdaq right now is doing the same thing. It's up 51 points, and at one point it was trading at 14,920. is that the high? 26. And now it's trading at 13. So it's 113 points lower since the European Open this morning. And then the Dow Jones Industrial Average, right there, is trading up 33 points. And it was trading at 404 of a high. And we are almost 200 points lower now at 211, 210. So they are putting pressure on that. Yeah, I agree with you. We'll see the new targets when everything starts to smooth out. I guess we're at the beginning of this new situation. Don't you think that's the best way of looking at it? We've moved into that new situation of inflation, a weak China, and U.S. economy trying to be transformed into some type of socialist bureaucracy. So, and we're going to go back and look at the J4X, and we'll look at the dailies now on these stock indices. Unless someone wants to see something. Let's see. Let's go over to here, and we're going to go back to the S&P like that. We'll look at it on a daily basis. And let's go to J4X and put it in there. There it is right there, S&P 500. You see it's up a little bit right there. And we got two reds going on, and the white line is busted. And now we go to here, and you can see the same situation going on. We're into the sell for a few days, and our weekly has moved down pretty aggressively to wipe out last week's push right there. Okay, then we go over and take a look at the Tech 100, which is the Nasdaq. Pretty much most machines, it's referred to as the U.S. Tech 100. Right there, the NQs. It's 100 of the best in the Nasdaq universe. You can see same situation, white line pierced, pressure on the hinkies, and on Chicago we have the same situation. Two red dots, up a little bit, and you can see them playing with the weekly again. Now this has been in a weekly buy for, was it 16 weeks? Something like that. All the way back to here we've been in a weekly buy. So, what is that? Let me just get it up on the fact check. Where's that now? Something right there. There it is right there. And line 26. 16 weeks in a buy, 1 day in a sell. So let's see if they really make a challenge to that. You know, it's awful hard to believe gold is going down with the stock markets getting beat up, but it's what it is. It's the strangest thing in the world. That's that handshake of yours for sure. Let's see. So that's it there. We did it here. Did we do it here? Yeah, right there. The NQs. So I don't know about last, but we're taking a look at the Dow Jones Industrial Average on a daily right there. You see it's almost unchanged. Same situation. And the weekly is, where's the weekly now? The weekly is minus. That's what that is. The weekly is minus, so we can take that and remove that for the moment. Right there. Because the weekly is so small. Alright, we should try to turn that on. Let's see, where's that? There we go. Style. There we go. You see it right there. -8, just went now -10 over there on the corner. Can you see that? I think it's blocked. Let's see. Do here. There we are. Now you see it's -10.67, now -9, 8.67. You know, it's just flirting with the sell side of things. You see, oh wait, Max says after 15:05 around target done, then we'll wait for the next create an agreement, right? And then we'll see the new targets. I hear you. We'll see. It makes sense. Central banks are going to play this game until they're put out of business, really. So at this point, it's going to be an extreme of the extremes. And I'll just, you know, I guess you're saying basically that you're going to stay short no matter what. You're going to play the downside and not care what's going on. And so now let's go and check out one other. That's the weakest of our 4 stock indices, and that is the Russell 2000 right there. And it's flirting with 2 days at a daily sell like everybody else, but notice the weekly is holding up in there. And they had a hard time taking out these lows there and there and there. They keep on making higher lows. And we're not really seeing them taking out higher highs. It's a flag really going on. So it's not taking out the highs, and it's not, smooth that over, and it's not taking out the lows. This thing's really trapped. This is the weakest of the stock indices. All right. Now, where do we got from there? I guess we're kind of towards the end of the show here. If anybody wants to see anything, let us know. We'll put it up there. But at this point in time, it is what the markets have been, and that is in somewhat of a calamity for a combination of things. We've got oh, there we go, Corbe Karamakarisi. Hello, how are you? We're watching. Let's see. We're watching the world really bounce around from all the odd economic concepts. I mean, literally, in some ways, when you think about gold, you have to wonder, what happens if the central banks do disappear, which I don't expect to happen, of course, but you would think that those things would build up in those systems, and we'd see, a healthier market overall in the metals complex, which we seem to lose. I mean, every time they try to lift the product up, it seems to fail. They don't seem to be able to get this thing to lift, the metals up at all. So, all right. Our title today will be gold. And let's see what else. I guess GBP. That's a goodie. Because we're real surprised that the action we're seeing out of that. And how about let's see, what else can we say? S&P 500. That'd be good. All right. So this is Doc from North America. We'll be seeing you tomorrow on Thursday. Same time, same channel. So everybody have a safe and smart trading day, and we will catch you on the flip side. Happy trails to you until we meet tomorrow. Happy trails to you, to all our trading friends. Ta-ta for now, traders. And thank you, Max, for the conversation. It's definitely something to think about on that gold complex. There's no doubt about it. You are hitting a strong point there.